An exchange-traded fund, or ETF, is a way to invest in a basket of assets all at once. Let's break down how they work. An ETF stands for Exchange-Traded Fund. Think of it as a single ticker symbol that represents a collection of stocks or bonds. Instead of buying 50 different companies, you buy one share of an ETF, which holds those companies for you internally. ETFs are popular because they trade like stocks and typically have lower internal costs compared to traditional managed mutual funds. While mutual funds only price once at the end of the day, ETFs can be bought or sold at any moment during market hours. Because many ETFs follow an automated index, their management fees are often significantly lower than actively managed funds. Remember that an ETF is just a tool. It helps you diversify, but the underlying assets still carry market risk. Research the holdings of any fund before you invest. Thanks for watching, and check back for more tips on money basics.